It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, November the 14th, 2016. I know it's already Monday again. Hope you guys had a great weekend out there. Got a big week coming up here. Got a big week here. We're covering crude oil, S&P, gold, euro, and of course, we can't forget about the FDAX. In tonight's newsletter, markets continue to digest last week's unexpected election, but we get some big moves in today's session, which usually means big opportunities for us tomorrow. We have contract rollover, a weekend gap, trading ranges. Janet Yellen's on the mic this week. A ton to cover in tonight's newsletter. I want to make sure you guys are ready for that. Before we jump into our charts, though, I do want to remind you the only place to watch the full-length version of this video with all the markets and all the analyzing, I want to remind you the only place to watch this full-length version is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. The YouTube video is only a small portion of the entire video. Check the description of that YouTube video. Follow that link in the description of the YouTube video and join me here on the blog at Sideways Markets so you can get the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download those charts. That's right. You can have all the charts you see me using in tonight's video. You can download those charts, have them ready on your computer tomorrow. In the upper right-hand corner, grab your free pass. Don't say I didn't give you an opportunity here. If you're not a student at School of Trade, I got a free pass for you guys. Come out and join me as a guest for a couple days this week or next week, right, in our trade room as a guest. Grab the free pass in the upper right-hand corner. And don't forget, if you're brand new here to School of Trade, we got a great frequently asked questions page on our blog. There's also a link on the website homepage as well, and you can learn the who, what, where, when, and why. We're known as being one of the best in the industry at what we do here at School of Trade. Grab that frequently asked questions page on the right-hand side. Hope you guys had a great weekend. We got a lot to cover here tonight. Let's jump right in. Thanks for joining me here once again. Tomorrow's Tuesday, November the 15th. We got really nothing major here coming from our friends in the overnight session tonight. So really nothing major here tonight for this third full week of the month of November. We go into tomorrow, Tuesday the 15th. We got a little bit of news coming out of Germany tomorrow morning at 2 a.m. The Italians, right, we'll hear from the Brits and, of course, right, the Germans again before we finish up the overnight session. A peppering of news in the overnight session, of course, here coming from everywhere from the UK, or sorry, say from Great Britain, the Italians, the Germans. We're going to hear from the ECB tomorrow morning at 5 a.m. If you're trading the London session tomorrow, right, keep your eyes open. They get a bunch of news tomorrow morning that you want to be aware of. As we go into the U.S. session, don't forget we'll be opening up our trade room tomorrow morning at 8 o'clock Eastern Time with all of our students here at School of Trade. We got the retail sales, a huge number this week for us. Third week of the month. We're going into the holiday season, of course. I know. Have they started playing Christmas carols yet in the shopping malls around you? Right? They're going to probably start soon. We're going to holiday season. Retail sales will be a big number tomorrow. We got a couple more reports there at 8:30 a.m. But again, retail sales will be your headline number. Business inventories at 10 a.m. to round out the morning session for the U.S. traders. I don't expect to see too much of a movement of the needle tomorrow because of business inventories. I would expect tomorrow the big news of the session is going to be that retail sales report at 8:30, the CEW and the GDP flash at 5 a.m. tomorrow. Those will likely be the big market movers if you trade in the overnight session into London, and of course with me tomorrow morning as a trader, as a student in our trade room. Heads up here. A couple things here this week. The 18th of the month is typically when we see rollover. I'm getting a little bit of a heads up here. We might be seeing rollover a little bit earlier on crude oil futures. So we do have a watch this week on crude oil. I'll be watching crude, looking at the volume between the, dare I say, 117 contract. That's the next contract month on crude oil. So just be on the lookout here. Probably not tomorrow, but Wednesday, Thursday, Friday, we'll be paying attention to contract rollover on crude oil, moving from the CL 1216 to the CL, oh my goodness, the 117 contract. I can't even believe we're talking about 2017, but that's next on the schedule here for all you crude oil futures traders. I'm getting a heads up right now from our indicator package that we do have rollover starting on Wednesday. So we'll be looking at Wednesday, Thursday, Friday for rollover. Another thing you want to set your clocks for here this week, I know. We got Yellen at 10 a.m. I'm going to go out on a limb right now and say this might just be her biggest press conference or testimony of the year this year. New president-elect. We've all kind of heard the frustrations over the Fed from not just our elected president, but also from major fund managers and a lot of people in the industry. So Janet Yellen's going to have her feet to the fire on Thursday morning at 10 a.m. We'll talk more about that in tomorrow night's newsletter, because the end of the day on Wednesday, it's probably going to be a little bit sluggish. So lots of news coming in the overnight session tonight. Major news tomorrow from retail sales at 8:30 a.m. Wednesday, Thursday, Friday, we're starting to watch for rollover. Don't say I didn't warn you. And of course, we got that Yellen on Thursday morning. That means it'll be an early in, early out Thursday session for all of us here. And again, Wednesday night, we'll talk more about the plan for being yellified on Thursday morning. All right, looking good here so far. Get the schedule for today, tomorrow, and later on this week. All right, we're going to keep touching base on that as we go further into this week here. Let's jump right in. We got crude, S&P, we got some gold, we got some euro, and of course, one of my favorites here, the FDAX. Crude is bullish and trading at the highs of either a spike in channel or a spike in wedge this evening. This tells the buyers to be looking for opportunities to buy low at support levels at the low of the channel tomorrow. The buyers have control, but they won't want to buy this high. So their focus will be staying patient and trying to get in at a lower price around that correction zone area tomorrow. If the buyers don't get the pullback, it's a pretty strong move. If the buyers don't get the pullback, then the other option is a breakout pullback above the channel highs, a little bit more aggressive, but they need to see some strength go through those highs and then focus on buying the pullback to the moving average for a move up to the measured move target waiting overhead. First of all here, what a remarkably bullish reaction to the end of the morning this morning, right? The bears had complete control, almost finished off a major measured move. They couldn't finish off a major measured move. They couldn't finish off channel rotation. And then, this is when I remind you guys, it doesn't matter. The why has nothing to do with how I'm going to trade this whatsoever. So I get a lot of emails every afternoon. What caused price to go like this? I really don't care. I really don't care. It'll take me more time to figure out the why. And by the way, there's really never going to be a single cause and effect for these markets moving the way that they do. It's very difficult for me to see value in trying to figure out the why. What is most important, though, is a very strong move in one direction. Now, what do we expect when we see a strong move in one direction? We expect, at the very least, we expect to see price retest that high. At the very most, we expect to see that turn into a measured move. You can see how I have that, right, that measured move now outlined for us. So, what does a buyer want to do here with this move? Obviously here, that spike, spikes typically turn into spike in channels, spike in ranges, spike in wedges. This could easily be seen as a spike and wedge. I could also see it as a spike and channel. Either way you slice it, there's pretty much two ways to reliably trade this. The most important thing will be getting this price to pull back. We obviously have a bull market, but buyers are going to be weary about buying high. The most reliable way to do this will be pulling back into the correction zone, looking for seller failures, looking for traps, right, in and around this correction zone. And really, in my opinion, right, it's going to go all the way down until we get to that 42.82, the bottom of this battle zone. So keep an eye on the correction zone. Keep an eye on this reversal line at 43.12. Keep an eye on the battle zone. I wouldn't be surprised whatsoever if we see this thing head lower. Moving average comes around. Sellers try to reverse the trend. They fail, right? And then we see this price poke its head right back up to those highs again. So that's ultimately where the buyers want to be looking for, right? Pull back into that battle zone, pull back into the correction zone. Just give me a chance to buy without buying high. Now, don't forget, we provide all the entry triggers that you're going to need for this. All the setups, all the entry triggers are covered in our advanced course. And so obviously, watching these tomorrow with all of our students, right, in real time in our trade room. What else? What else can the buyers do? What if we don't pull back? The next pullback obviously is going to be that breakout pullback through the high. This is the one that really requires a lot of strength. Let's put it that way. If I'm going to buy high, You need to prove to me that this market is strong enough, it has the intention of fulfilling the mission now, going up to retest that prior day high and to make that measured move. What I'm looking for, and this is not just the only example of how we're going to use this moving average, but imagine now a really strong breakout, strong enough to get that moving average above the high of that channel or above the high of that wedge. That's really what I'm looking for here tomorrow. It's really got to be strong. What I don't want to do is I don't want to fall victim to one of these kind of breakout pullbacks, right, that get the moving average only halfway there, because now obviously you're selling into that resistance, and that may lead, right, to a collapse back down where the real professionals are waiting right now to buy it back up. So two scenarios here for the bulls: either a pullback right into the correction zone, the reversal line, the battle zone, or strong breakout pullback, right? And again, when I say the word strong, I'm usually referring to, right, a strong enough move to get that moving average above, in this case, an area of resistance that I can now use as an area of support. First of all, prior day high, measured moves, those will make for easy targets, right, for those bulls going higher here. What about if we want to be a bear right now? There are ultimately two spots in which you can look to be a seller. Obviously, if price keeps going higher, we can then start waiting for that move, right, to make its move lower, and that, of course, will be another option here for you. So if you're a patient seller, you want to be waiting for the buyers to reach their objective, get back below that moving average, nice strong move off that high, hold the pullback, right, and then back down. That requires obviously some patience here, right, for those sellers. But obviously, though, that's going to be that'd be one opportunity here for those bears. The other one here now, this is where that moving average really comes into play. I want you to be thinking about two spots here. First of all, below the correction zone and then below the battle zone, right, if price goes lower here to the downside. Now, the first one, this is going to get you in below that correction zone. This is going to be a 40-60 trade, right? That'll be a 40-60 trade. The next one here, that's going to be your 70-30, your 60-40, 70. It's a much more reliable opportunity for the bears getting below the battle zone, and specifically speaking about that 42-82, right? That 42-82. Okay, so I would much rather see my sellers out there tomorrow wait until we get back below that battle zone and then look for that sell from there. Either get it up and then bring it back down, or, right, get that pullback to break through all of these support areas here. We get through the correction zone, through the reversal line, right, through the battle zone, and then hold, and then you'll have the opportunity here, right, to be a seller. Be careful trying to sell into this high. It's a very, very strong bull move, and we see a real strong bull move like this, it's usually going to be bought up anytime it pulls back. We'll wait and see what this thing looks like tomorrow. And again, as I always remind you, we'll be doing this tomorrow in real time with all of our students. How about some S&P? Yeah, a little bit ugly here. S&P is bullish and trading in the middle of a range or middle of a triangle this evening, which means pending any strong breakout, our plan will be to buy low, sell high, avoid the middle of the range, focus on failures, right, and really try to avoid buying into the high, avoid selling into the low, stay the heck away from the middle, and focus on failures tomorrow. The most recent test is coming off the low, so we expect to see buyers finish their rotation back up to the highs, where we then expect to see sellers waiting to sell the highs and take it back down to the lows. The most important thing tomorrow will be focusing our efforts on failure setups to sell high, buy low, while keeping an eye out for a strong breakout of the range, which would then tell us this multi-day range is trying to develop into a new trend. Boy, you can definitely feel the confusion. Some might even call it a train wreck here right now on the S&P 500. They're definitely holding their levels here, right? We're not seeing the whole, market Armageddon that the news media was calling for, right, when Trump was elected. But we're definitely not seeing us really gain any ground here right now. You can definitely see the multi-direct, kind of the two trend lines coming in, multi-day trading range, if you will, right? And we want to focus on buying low, focus on selling high, and staying away from the middle, right? The middle of that trading range is always going to be the most challenging spot for it. So, of course, this morning, we opened up this morning in the S&P, and we find ourselves coming off the high of this. This is very, very easy.